Hi everybody, welcome to our Easy Storage Client Success Seminar. My name is Ty Meinhardt. I'm over our Easy Storage accounting and tax services that we have here. Can everybody hear me okay? I guess if you can't, go ahead and message in. We'll go ahead and jump right into it. I'll be talking about self-storage tax laws and planning strategies. So just kind of an outline of the presentation. I'm going to go over what we do here with our Easy Storage accounting and tax service. I'll go over the benefits of outsourcing your accounting, and specifically the benefits of using our accounting and tax service. And then I'm going to shift it up a little bit and go into some of the more common questions that we've seen specifically in this last year in regards to entity structure, the tax consequences of your entity structure, and then cost segregation. Looks like we don't have too many people. We have about 8 people attending right now, so we can make this a little bit more personal. If you do have a question, feel free to chime in, to message in, and I'll do my best to answer it. I was going to have questions towards the end of the presentation, but where there's so few of us, feel free to chime in and I'll do my best. So to briefly go over what we do here with our accounting and tax service, we try and take the burden of accounting off of your plate. So we take care of most everything to do with the accounting side of things. So we'll take care of the bookkeeping, we'll reconcile your accounts on a monthly basis, we can take care of payroll for any employees that you may have, and we can file the business tax return on the federal and state levels. Then to go into a little bit more detail, so on the bookkeeping side of things, and I guess first of all, one of the benefits of using our accounting and tax service is that we are industry specific. So I've been doing accounting for a little over 8 years now, and 6 of those years have been in the rental industry specifically, and even more specific in the self-storage industry. So we have a lot of background and a lot of knowledge and expertise in accounting geared specifically towards self-storage. So what we do with the bookkeeping is we make sure all of your transactions are included and coded on a monthly basis. We make sure nothing slips through the cracks. So when we first onboard a client, we'll go through a list of questions with them, and even more so in detail with someone who's just purchased a storage facility or just built a storage facility. A lot of the times we'll see transactions that slip through the cracks because there may not be a business account set up yet, or they were late getting a business checking account set up, and so they'll pay for something personally. And a lot of times those types of transactions slip through the cracks, whether it's you're buying a storage facility and you have to come out of pocket to pay for the appraisal or whatever it is. Something always seems to slip through the cracks. So we go through in detail and make sure that everything gets coded. With bookkeeping and with accounting, it's one of those things that you just have to be hands-on in doing. You have to be involved every month. You have to be in coding the transactions and reconciling the accounts to make sure everything gets included. In our process, we have someone who initially codes all the transactions on a monthly basis and reconciles and then prepares financial statements. And after that, we have a second person that reviews the financials and reviews the accounting work that's been done. And then we actually send out financials. We send out financial statements on a monthly basis, and we gear those. Like I said, we've been involved in the self-storage industry for quite some time now, and so we gear the financial statements that we send out so that they're easy to read. So we have a profit and loss that's usually 1 page. we have a balance sheet, and then we have a second profit and loss that we send out as well. And we can do custom reports if you want to see cash flow or the profit and loss organized in a different way. We're more than happy to tweak the reports to make them beneficial to you. One of the benefits of having financials on a monthly basis is that you know where you're at and you know where you're spending your money. And there's value in that, not only looking at it on a monthly basis, but at the end of the year or 6 months into your storage facility, looking back and saying, hey, I spent 50% of my gross revenue on advertising or on repairs and maintenance or on an employee, and looking back and saying, is this sustainable? Is there something I need to switch up so I have better cash flow and so that my net operating income is higher, the best it can be. And then there's peace of mind in knowing that you have professionals taking care of your accounting. It's not something that you just want to hand off to anybody or even try and do yourself if you don't know what you're doing. You know it's being taken care of the right way. With payroll, if you have employees, we take care of everything on the payroll side of things, from time tracking to processing payroll when it comes time for payday, to remitting the taxes to the right taxing agencies, and to filing all the necessary reports on a quarterly and end of the year basis. And then, like I said, we do take care of the business tax return on the federal and state level. And at the end of the year, there is a lot of communication back and forth with our client's personal accountant or whoever does the personal tax return to make sure that we have the business return filed in a way and organized in a way that it flows down to your personal return in the best possible scenario, with figuring out depreciation and which expenses to take here and there, and making sure that it flows through the right way. So now that we've talked a little bit about what we do, I want to go over some of the most common questions that we've seen in the past year. A lot of the clients that are approaching us and that we're bringing on to the Easy Storage Accounting and Tax Service in the last year have either just purchased a storage facility or have just added on or built a storage facility. And so one of the most common questions we get is, what entity structure should I be? Do I set up an LLC? Do I not set up an LLC? Do I include my wife as a partner? Should I have other partners? Should I be a C corporation or make the S corp election? And to just briefly go over these, there are 5 main entity types. There are other ones, but the 5 most common that we see are a sole proprietorship, which we don't see this one very much. That's just someone who goes out and purchases a facility under their own name and does not set up an LLC. For tax purposes, this is considered a disregarded entity. So all the activity from the storage facility just goes on a schedule on your personal tax return. There's no federal tax return done here. The next most common one we see, and the one that we like the most, is a limited liability company with either multiple members or single members or a single member. Both of these, whether you're a multi-member or a single member, it does make a difference. A multi-member LLC is considered a partnership for tax purposes, and there is a federal tax return that you have to file and potentially a state tax return. A single member LLC is considered a disregarded entity and is treated the same as a sole proprietorship. So all the activity from the store, there's no federal tax return done. All the activity from the storage facility just goes on a single schedule on your personal tax return. And then there's a C corporation, which can be beneficial and even necessary in some situations. If you're looking to take out retirement funds early from your 401k, then most of the time, it's necessary to go through a C corporation to avoid early taxation on your 401k or retirement distributions. And then there's the S Corp election. So if you're a C corporation or a limited liability company, you can make what's called the S Corp election. And we don't see this one very often. The S corporation election is a lot more common outside of the rental industry. So now let's talk about tax consequences from each of these. One of the most common mistakes that we see with storage facility owners who come to us and have filed prior year returns, whether it's themselves or by another CPA or accountant, is that activity from the storage facility is reported on Schedule C when it should be reported on Schedule E. So we'll get into more of this conversation later, but there are two types of income in general. There's active income and passive income. Storage facility income, rental income, is considered passive. And the benefit to that is that passive income is not subject to self-employment tax. I don't know how many of us are familiar with self-employment tax, but self-employment tax comes into play when you own a business and it's active income that you're earning. So what self-employment tax is you all know, most likely from having a W-2 job, that you automatically have 7.65% withheld from your W-2 for Social Security and Medicare taxes. It's automatic 7.65% taken out. What a lot of people don't see is that their employer has to match that 7.65%. So there's a total of 15.3% paid on wages that you earn, 7.65% by you and 7.65% by your employer to Social Security and Medicare. When you start your own business and you have business activity that's active, the IRS considers you the employee and the employer. So you pay both sides of the 7.65%. That it actually surprises a lot of people because it's not something that you pay or are typically aware of throughout the year. It comes into play at the end of the year on your tax return when you see self-employment tax of 15.3% being tacked on to any net income that you have. So like I said, it's a mistake that we see quite often, whether it's the federal tax return, whether it's a federal partnership tax return that's filed the wrong way, the activities reported on the wrong page, or whether it's just a single member or disregarded entity that all the activities just being reported on the personal return. We often see it flow to Schedule C, and it's subject to the that extra 15.3% self-employment tax when it shouldn't be, because rental income is considered passive. Yeah, to avoid that, you want to see your activity from the storage facility reported on Schedule E and on a different form on the federal tax return. Another question that we'll commonly get is about cost segregation. And to just take a step back, cost segregation has to do with depreciation, and we get a lot of questions from our clients that want to do cost segregations on what depreciation is. So to explain depreciation, I found a little description on the internet, a little definition on the internet that I found valuable. So just to read it, depreciation is the monetary value that an asset decreases over time due to use and tear. So we all know or are familiar with the term depreciation. You buy a car and 5 years later, it's not as valuable as it was the day you bought it because it's depreciated just with wear and tear and time. So accounting estimates the decrease in value using information regarding the useful life of the asset. So for example, on the right side, you'll see I have some examples. Buildings, if it's a residential building, it's typically depreciated over 27.5 years. So you purchase a little townhome to rent out. Your purchase price on that townhome, you can't take it all in year one. You have to spread it over 27.5 years, and that's called depreciation. So we depreciate it over 27.5 years. For a commercial building, it's 39 years. For other assets, gate and fencing, landscaping, gate systems, security cameras, kiosks, those are all 5 to 15-year assets. And 5 to 15-year assets are typically and generally eligible for what's called bonus depreciation. You can take, with the Tax Cuts and Jobs Act, you can take 100% bonus depreciation in the year that you acquire the 5 to 15-year asset, generally. So this is what a cost segregation does. A cost segregation, it's a specific service and it's a specialized service. You'll reach out to a cost segregation company. They'll come to your facility and they'll segregate out all of the assets. They'll break everything down and they shift it from being a commercial building and being depreciated over 39 years to assets that can be depreciated over 5 to 15 years and that you can take a bonus depreciation on. There are pros and cons to this. So cost segregations can be very beneficial if they're done under the right context. So a cost segregation will push as much depreciation on an asset or on a property through on the first year as possible. So we're pushing as much depreciation and creating as big as a loss as we can through on that first year. The pros is that it potentially saves you quite a few tax dollars and puts more money in your pocket right now. The cons is that it does cost money to have the cost segregation done. It's usually around $3,000. If it gets into the $5,000, if you're looking at doing a cost segregation and they're quoting you more than that, I would have several companies kind of quote it out and see if you can get a better price. Typically, you can approach cost segregation companies and they'll give you an idea on what their fee is and how much depreciation they can create and how many tax dollars you can save before you even pay them anything. Another con is that in the event of a sale, if you've depreciated your asset down to a really low value and then you sell it for a higher value, then you have to recapture that depreciation and you have a bigger gain on the books that you pay capital gains on. So there are some strategies. So on the last page, you'll notice that I underlined defer. A cost segregation does just defer taxes to when you sell it. So instead of paying tax right now and over the course of the next several years, you pay the majority of that tax when you sell the facility. There are different strategies with doing 1031 exchanges to continue to defer that tax and continue to push it down the road. The other important thing to consider when you're looking at having a cost segregation done is that there are scenarios that mitigate or totally get rid of the pro side of having a cost segregation done. So as I mentioned before, there are different types of income. There's passive income and there's active income. Storage facility income is passive income. If you have other businesses that are doing well and generating a lot of income, and you try and buy a storage facility to do with the idea of doing a cost segregation and pushing a huge loss through on the storage facility to help offset other business income or potentially other W-2 income that you may have, keep in mind that a passive loss can offset active income. So if you, a lot of people will go into a cost segregation with the idea that they're going to create this huge loss and offset, their W-2 income that they're receiving or another business's income, which is okay if the other income is considered passive, but most of the time it's not. And that's not something that the cost segregation companies and cost segregation services will typically go over with you. It's something that you should talk to your tax accountant or CPA about before you pay to have the cost segregation service done that ends up not benefiting you because you can't offset this other active income that you have with the passive income. In some cases, the other thing that I just want to touch base on there is that in some cases, depending on the size of the storage facility and the cost of the storage facility, there's not enough assets to split out to create a loss big enough to save you tax dollars for the fee that you paid to have done. So it's important to take a look at the cost, to talk to your tax accountant or CPA, to see what else you have going on the personal side, to see if the cost segregation is going to be worth your time and money. I want to open it up to questions. I know we've kind of been through quite a bit of information. If there's anything you don't understand, I want to make sure that you understand it. Or if there's any questions, I'm more than happy to answer them. Anybody have any questions at all on cost segregation or entity structure?
Why is an LLC preferred to a sole proprietorship?
Okay, good question. So an LLC, and that gets a little bit, so there's two sides to this question. One, there are the tax implications, and the second is the legal implications. So on the tax side, there is no benefit from being an LLC versus just going out and purchasing the facility under your own name. It all should be reported on, all the activity ends up being reported on Schedule E of your personal tax return, regardless of if you're a single member LLC or, like I said, you just go purchase it under your own name. There is the legal aspect of it, and I won't touch too much on this. I'm better with numbers on the accounting side and not on the legal side. So, but the LLC does provide limited liability protection that protects your personal assets from business assets. So when you set up an LLC, you do have that limited liability protection there. If someone were to slip and fall at the storage facility or any other litigation were to come up, they could only come after the assets that are within the LLC, not your personal assets. And again, best to consult with a legal professional on the legal side of things. But good question.
She says, so for tax purposes, they are the same?
Correct. Correct. For tax purposes, the activity is not treated any differently. Yep, whether you're a single member LLC and you've set up an LLC and purchased a storage facility, or you just go purchase it under your personal name, all that activity gets reported on Schedule E of your personal tax return. There's no tax benefit or tax downside. I'll wait just a couple more minutes here to see if anybody has any questions. And even if you don't have questions on entity structure or cost aggregations, I'm more than happy to answer any accounting related questions. So I'll wait a couple more minutes here before wrapping up.
Do you want to mention the promo? And then we can...
Yeah, for sure. So thanks everybody for joining. It's not very often that I get a room full of people, 13, 14 people that want to listen to accounting tax related topics. So thanks a ton for joining. If you do have questions, after this, I'm more than happy to answer any questions that come up. So we do have a special promotion going on right now. If you want to sign up for our accounting and tax services, we will give you 1 month for free. Just mention promo code X to get this offer. Thanks a ton for joining us. Oh, it looks like we do have one more question. So the question is, I completely understand the value of your accounting services, but if a customer uses your software but doesn't pay for your accounting services, do you tell them what reconciliations to do monthly? For sure, we can recommend what reconciliations to do on a monthly basis, but we don't get very much into how to do those. We'll do the best to help you that we can. We'll direct you towards the right reports and the easy storage software, and do the best we can to help you, for sure.
Thanks, she said.
Okay. My email is ty@easystoragesolutions.com. Feel free to email me with any other questions that might come up after this. Thanks.